Bottom lines are breaking as homeowners prepare for more pain.
We've never seen 10 rate hikes in a row in this country.
The predicted 0.25% rise tomorrow will see the average homeowner having to find an extra $13,000 a year compared to 12 months ago.
There's a lot more pain to come yet. You can see people out there, mate. They are tightening their belt. It's pretty scary what the next 6 months is going to look like.
She's not wrong. All major banks predicting the cash rate will reach 4% by May, up from April's record low 0.1%. The aim? To get Aussies to close their wallets and bring down runaway inflation.
The RBA has one very blunt instrument to use in order to control inflation.
Very blunt. But are there any sharper instruments Australia could use?
There's surely a better way of locking up some of the cash in the economy, whether it's putting it into super, raising the GST. I'd like to see some discussion about the rules.
Recent research citing 69% of excess inflation is actually being driven by some of our biggest companies posting record profits, not by average Aussies splashing the cash.
If you calculate what inflation would be without these excess profits, it would now be about half what it is now.
The government today under pressure to do more.
More Australians are turning to Food Bank so they can put their grocery money towards their mortgage payments. Why has this Prime Minister misled the Australian people?
But there were no easy answers.
There are encouraging signs that we are getting on top of it, but inflation will be higher than we'd like, for longer than we'd like, and we need to acknowledge that.
So is it time to stop putting the squeeze on everyday Aussies and find some other ways to tame the inflation dragon?
Economist Nicki Hutley is here to give us her take. Nicki, good to see you. What other options do we have here?
Well, we know obviously monetary policy is one thing with the Reserve Bank, but we want the government to be doing more as well, and they can with what we call fiscal policy. So that's controlling how much they spend, what they tax. We know if you cut government expenditure by about $6 billion, that takes away the need for a 25 basis point rise in the cash rate at the Reserve Bank. So there are things the government can do, but it means cutting spending or raising taxes. So there's no silver bullet here, unfortunately.
Well, Nicki, let's go to the raising taxes issue. David Pocock, the Independent, said, why don't we raise the rate of the GST? He's even talked about knocking on the head various other tax advantages like negative gearing. Is he right?
He's absolutely right. And look, we had a massive tax review, the Henry Tax Review, more than 10 years ago now, that told us all we needed to do. The International Monetary Fund is telling us we need to rely less on income taxes, more on indirect taxes like GST. We need to, but someone has to have an awful lot of political courage, cojones, if you like, to make those decisions. But we need to make these decisions, and we need politicians to be brave for us to do the right thing, not necessarily the popular thing, and tell the story of why we're doing this.
Bravery is the word, and probably a first-term government is when you ought to do it. The RBA, though, I'm intrigued by this. Where do they go now? They don't really have anything that they can do other than jack the rate up, do they?
Well, they've never really had anything more than that. That's the way they go. It's a really blunt instrument. They'll be the first to admit it. But, you know, it looks like they're determined to do a few more. I mean, I think it's a pretty foregone conclusion they'll go tomorrow. But I think after that, they need to pause. We've had a whole range of indicators that show there is no wage price spiral. The economy has slowed sharply. It looks like it's continuing to slow across a multitude of indicators that we economists look at. I'd be sitting and pausing for a while. To risk it all and put people into recession, this is people's lives, their livelihoods. We've got to be very, very careful.
Nicki, I know you don't have a crystal ball, but when do you think the big crunch is likely to happen?
Well, there's always a delay between interest rate rises and where it flows through to the wider economy. And, of course, it's delayed even more this time around because we've got all those people on fixed rate loans who are coming off more slowly. So I would think that towards the end of this year is when we're going to... I mean, we've already seen the economy slow, but unemployment is going to be rising. And that's the thing that probably most people will really feel. And that's the one they'll be looking at. And, I would expect to see a 4 in front of that probably well before the end of the year.
Sorry, Nico, I think Sam was asking about when the universe stops expanding and it comes back in, and then you have the big crunch. Yeah. So when is the end of the universe?
What does it all mean, Nicki?
It feels like it now
question.
for homeowners. That's the problem.
Well, we know the answer to life, the universe and everything. It's 42.
Yes.
That's an easy one.
But we never got the question. We never got the question, Nicki.
We didn't, but I suspect the Earth is close to the end of its 10 million year program now, and we should get the answer any time. We just might need to cut Waleed's brain open.
Sure, I'm
Thanks
up
for
for
asking
it.
that question.
Sorry, Hitchhiker's Guide reference there. It might be a bit
Really.
too
Sorry,
far.
Waleed, I didn't know what I was getting you into.
Drag the mood down a little
Do you know what? I will do whatever it takes for the good of the people.
Nikki, thank you so much for your time tonight. Always appreciate talking to you.
Thank you very much.